Jason Calacanis is with us. Jason, welcome back. Good to see you again.
It's good to be home. How are you, Carl?
I'm good. I've been wondering what Jason thinks about Lyft having worked its way down from the mid-80s in just a few days. What are your thoughts?
Yeah, I mean, everybody gets a little obsessed about IPO pricing, and it's super exciting. But what we see here in Silicon Valley is these stocks are now trading in the private market for a couple of years before they go public. So it's really not that big of a deal for us. I get offers every day for my shares in Calm or Robinhood or Uber or Thumbtack. There's a whole secondary market going on here. As long as we price them within, I think, 10 to 15%,
I'm glad you're good.
It's going to be fine.
I'm wondering what you tell people who bought at 80.
Yeah, if you're buying stocks to flip them and you get burned, you're a gambler. So you get what you deserve. And if you double your money or you make 20% in a day or a week, congratulations. But let's be clear, you're gambling. I think you should be looking at these stocks and trying to hold them for 5 or 10 years, because we always overestimate what these companies can do in the short term, and we underestimate what they accomplish in a decade. So buy it and hold it for a decade, and don't worry about 10 or 15% in the first couple of weeks or days. It's meaningless. Take a longer outlook.
Which, Jason, begs the question. I mean, there's a lot of focus on whether Lyft shares have been falling recently because there's this expectation about Uber going public next month, whether there's a so-called pair trade that could be playing out here for investors. What should folks who maybe want to buy these and hold them for the long term do? Do you invest in both? Do you focus on one? I mean, we talk about them both because they're ride sharing, but they are essentially two very different companies.
Well, I made my bet over 10 years ago when I was the third or fourth investor in Uber when it was a $5 million company. So I have a horse in this race. I always like to bet, the leader. I think, we have a Google, Yahoo, Facebook, Twitter sort of situation here. One of them is going to be the leader of the duopoly, and one of them is going to be the follower. And, I always like, and I believe that the person who's in the lead is going to have more data, more pricing power, and more network effects. So the fact that you can get off an airplane anywhere in the world almost today and take out your phone and get a cab at a great price with a great service, just like Starbucks went across the globe, Uber's gone across the globe, and I think that's the big win there. Obviously, I'm biased. Obviously, I have a horse in the race.
Yeah, a fast horse at this point, and I wonder how long do you keep that horse once it wins the race for you? I mean, a lot of speculation around who exactly was selling Lyft, probably some people who had been holding the stock for a long time. You've been holding Uber for a long time. How obligated do you feel to keep holding all of those shares that you've had all this time?
Well, I always take Jim Cramer's advice. You want to be diversified. Am I diversified? I gave Massa a little bit of my Uber shares during the Massa IPO. I'm not suggesting that Massa IPO is what we should be doing here in America. Actually, I think we should be boycotting the Saudi money until they solve their human rights issues, candidly. But I did give Massa a little bit of my shares, so I'm doing okay, and I think I'm going to hold for the long term the rest, because what I've learned from my friends at Sequoia Capital and Bill Gurley at Benchmark is a lot of times the growth that we see after the IPO, specifically Google, Amazon, Netflix, Apple, you want to hold those companies. And I believe the Uber story is just getting started. It's just getting started.